Welcome back to the Bitcoin Layer. I'm Nik Bhatia. Today we welcome TBL associate Johan Bergman. Many of you TBL pros have been reading Johan's fantastic Bitcoin analysis and especially his expertise on Bitcoin treasury companies such as Strategy. So go to thebitcoinlayer.com/subscribe to check out all of his fantastic work. It's his first time coming on the show to talk Bitcoin price, Bitcoin metrics. Johan, great to have you on.
Hi, Nik. It's a great honor to be here. So thank you.
Well, you've been doing fantastic writing for us. We've really been enjoying it. And my goal here today is to go through your top signal and try to extract that for the readers and even for myself so that I can get to know your framework better, how you think about the drivers, because in the end, the Bitcoin Layer, global macro and Bitcoin research firm, we're trying to understand how the price moves and why. And we associate liquidity and Bitcoin because we like to think about traditional markets and Bitcoin and the correlation, the co-movement, and the drivers. But I know that you, while you like to think about macro, you love the Bitcoin native metrics, including Bitcoin price just by itself, which is not a Bitcoin native metric, but really an approach to markets which we strongly believe in, which is price discovery, price action, and behavioral finance. So with that, why don't you bring up your first chart and tell me how you're thinking about the Bitcoin price today? And by the way, I should say, guys, that we are recording this on Tuesday, September 23rd.
Yep.
And the block height is 916,073. The current Bitcoin price just below 112,000.
Yes. So thank you, Nik. I want to start off with this overview, and basically, I make an overview for myself, for the readers, so to know where price might go, but also to be mentally prepared for upside and downside, because we as we are bullish on Bitcoin and we often think of the upside potential, but you also need to be considered. You also need to consider the downside possibilities, and I like to use a combination of metrics. So these metrics are. Most of these metrics are on-chain metrics, so Bitcoin native metrics, what you already allude to. But I put them in TradingView to have a better, clearer view, so that I can overlay the price action with these levels. And to be clear, these levels are dynamic. So like the short-term holder cost basis, it moves around. But I'm just pointing it out here where it's currently. So also where currently the true market mean is and the realized price. And at the moment, it really lines up really nice with these different levels. But as long as we're trading above the short-term holder cost basis, we could be bullish and remain bullish. But below the bullish zone, we've got this cautious zone that I like to call it. And I will show you in a bit in another chart why we should be cautious there. Basically, we've been trading the last 3 years within the upper first standard deviation band of the short-term holder cost basis and the lower the -1 standard deviation, and that's basically like this area. So between price discovery and the cautious zone. I like to look at with the on a higher time frame at the 3-day chart, because it's high enough to really get signal, but low enough, to reduce the noise. And basically, when we hit the all-time high here at 124, you see this engulfing candle downwards, and that started really this downtrend. And the question is, are we now reversing back and go further up, or is this just a move down, and where you should expect to the price trading further down? So that's why I also use the RSI at the top plane. And a few days ago, like for the weekend, it looked like we had this breakout and that we would move higher. This is also what I pointed out, that it's the decision time. So which way to go? But it looks like we last Sunday evening, Monday morning, we had this liquidation in the derivatives. And I'll show you that in a minute. But yeah, it looked like we're trading below the moving average of the 3-day RSI, and we're just hitting these short-term holder cost bases currently.
So when you talk, let's talk about just the RSI real quick. Now we're looking at Bitcoin here. The price, which exchange do you use? Just making sure that you're not using any. You're using 7-day price action here.
Yeah.
Not any Monday through Friday price action.
No,
So,
no. Yeah.
and your
Sorry.
RSI, I'm assuming, is a 14 period RSI.
Yes. Yeah, the standard settings. Yeah.
Yeah.
14.
So,
Yeah.
so what we're talking about now is a 42-day RSI, essentially, with these 3-day candles. So I want to set people in that. Why? And I keep RSI on my charts as a fixture. Why do you keep RSI in your charts? What does it tell you? And let me actually just set this up for people so that they understand what we're trying to do here. At the Bitcoin layer, we have our TBL liquidity index. That's what we are using to measure the macro drivers behind Bitcoin's price. Then you guys know that I'm a price analyst and that I'm always looking at the price only, stripping out all fundamentals, TBL liquidity, macro, what the Fed is doing, everything, and not reading the news whatsoever, and just trying to go into the price and get the behavior. The reason I use RSI is it gives me context of price and momentum. But I want people to understand why you use RSI, because eventually when we come in at TBL and we're providing signal from two angles, not just me doing chart packs and trade and writing trader notes for the pros, but actually having our metrics more quantitative in that drive to our research firm providing the highest signal possible for Bitcoin investors. So, with all of that being said, tell us your theory behind RSI and why you really rely on it. And then you can tell why the 3-day moving average is so important and why it leads to your decision time today.
Yeah, so the RSI for me, like you said, like you pointed out, it's a momentum indicator, and I like to use something to, like, sometimes you need to think a bit binary. Like trading and markets is never binary, but sometimes you just have to make a decision for yourself. All right, what do I think? Like, are we in an uptrend or are we in a downtrend? So this is also for me. I'm using the RSI in combination with the moving average to define, like, if I'm waiting to step in a trade, or really I need a trigger, I need a moment that I can say, all right, we're now in a downtrend or we're in an uptrend. And you have these periods where it could fluctuate, and it's one indicator is never enough to make decisions on. But I just like it to you really on the 3-day chart and on that length, you really see enough of the movements, the larger movements. But it's with the 3-day time frame, I've get the signal earlier than on a weekly chart. And on a daily chart, sometimes you have these days that we see Bitcoin trade up, and then like has this bar pattern and just drops down again with or the same amount or even more. And you cancel most of that out with putting it on a 3-day chart. So yeah, that's why.
So the 3-day candles are the anti-Bart formation uh, metric that we use. And
Yeah.
for people that don't get the reference, Bart Simpson's hair goes straight
Yeah.
up, spikes, and then goes down. So we have the Bart and the inverse Bart.
Yes.
And Bitcoin tends to do these Bart and inverse Bart formations, actually, unlike other asset classes, because of its honestly the uniqueness of its profile as an asset class and of the cohort of buyers and sellers, and previously the lack of connection to the traditional financial system, which allowed certain market movements. I think the frequency of BARTs are declining as we go.
Yes. Yes.
Ne-
I think so too. Yeah. Yeah.
Never. And this is it's interesting to us as Bitcoin price analysts because it's really in the nitty gritty of how Bitcoin is maturing as an asset class. One of the things that we've noted is a decline in realized volatility,
Yeah.
and it's quite structural in nature over the years, and especially the last 3 years, they're marching down. In the last
Yeah.
2 years, in the last 1 year, even that you're seeing this march down in structured realized volatility, and that has to do, I think, with the same reasons that we're seeing less of these BART formations in the price. But that's not as important as some of the stuff I want to get to. Let's
Yeah.
talk about the short-term holder cost basis. So I'm assuming here that this is the short-term holder realized price, which is
Yes.
a 155-day look back
Correct.
period, right?
Correct. Yeah.
So
Yeah.
what we're talking about here still now are coins that move on chain. This is an on chain indicator. That's not what your orange 200-day moving average, which is a price derived indicator. It's not the top pane, which is RSI, which is a price indicator. Okay, so your green line, your white
Yes.
line, and your red line are the short-term holder realized price, then a -1 and a +1 standard deviation from
Yes.
that.
Yeah. Correct.
Now, talk about what you just said at the beginning with regard to the short-term holder cost basis or realized price. What has Bitcoin's price been in within with respect to that range for the past how long? What was it that you said, please?
3 years. This is basically where you see the price trading, and so this is the realized price of the short-term holders, and you have these also within the Z-score. So this is the plus and the -1 standard deviation bands, and you can see since like 22, like we've been trading like 3 years within these bands, and this is an important thing because in the previous cycle, we saw, if I put those +2 and -2, then you can see with COVID crash, we almost hit the -2, but with the run up, we uh, multiple times hit the +2 standard deviation band, and then in the downtrend again, when we have this Terra Luna blow up, we also almost touched the -2 standard deviation band, and that's something that uh, not happened anymore since then, basically. So I think I tried to think in, if there's a trend, I think your base case should be that the trend continues until it doesn't. So that's why these are my bands. And you can see here the price is 149 and 39, $93,000. And that's basically these numbers. Yeah.
Okay, excellent. So for about 3 years since the depths of the 2022 bear market, Bitcoin has traded within one standard deviation of its short-term holder realized price. What does that tell you about the market with respect to the chain? Because that's the big idea here, is that we have a market price and a chain price, and the two it's not that the two are related, but that the two play off of each other. So, how are you reading this current 3-year bull market with respect to that?
So how I read it is like it's the real impulses, like the mania that we used to see in previous cycles. We don't see that anymore, and so the short-term holders, if the unrealized profit in previous cycles were much higher, and then so short-term holders had way more profit to take, and they did. But now the price doesn't rise so much that they have a lot of unrealized profits, because it looks like because the market is maturing, there's a it looks like the Bitcoin holders are selling their coins a bit earlier, and that's why we see this distribution, and the local tops are not as high as in previous cycles. But at the other hand, we also see institutions or other still Bitcoin holders that want to increase their stack when price gets below the cost, the short-term holder cost base, that they think, all right, this is an opportunity for me. We're still in a bull run, and this is a great time to buy and to add something, to add some more Bitcoin to my stack. So I think those those motivations are driving the price action that we are seeing.
It's so important because what that means, if that conclusion is correct, what that means is demand drives the Bitcoin price more than ever, now more than ever. Previously, speculation could take control over the market to a much larger extent. And so price separated from demand, because demand doesn't mean I want to go long a futures contract or I want to buy on the exchange and then swing trade it. Demand means I want Bitcoin delivered to me or my custodian. And I say or my custodian because the ETFs are a vehicle to move coins. They are evidence of Bitcoin demand, not Bitcoin speculation. Bitcoin speculation can be more easily isolated with pure exchange activity. But ETFs fall more into the demand category for me, objectively, because these are investors, whether they're retail or institutional, that say, I want Bitcoin, transfer it into my custodian or my ETF manager's custodian. And I have been saying this for a year now. The lack of unrealized profit prevents these waterfall movements lower in price. And I love this idea of all price action is fractal, in that if you take out your x-axis and your y-axis, and you don't show what the time horizon or the scale of the price, the movements on the screen over any reasonable, basically aside from your, inside your 1 hour candles, you won't be able to tell what candle it is, whether it's an hourly, a daily, a 3-day, or a weekly. You really won't be able to tell, because all price action is on a zoomed in basis, similar to how things behave on a long-term basis. And so for the Bitcoin price, the way that it's moving is it's just compressing no matter what time horizon you look at it. And so these huge movements up are more tamed on a 3-day, just as they are on an hourly. I mean, the days of the Bitcoin roller coaster, the coin going up and down, they're just becoming more and more muted. You guys know all about James Check at Check Onchain, and you know that he's one of our favorite analysts to go over what is going on in the Bitcoin market. And in Checkmate's opinion, the consolidation between $75,000 and $115,000 is evidence of a maturing market. Go to unchain.com/TBL to register for this event. On September 30th, James and the Unchain team will go through why ETFs are bringing more institutional allocation to Bitcoin and why this current consolidation is evidence that the Bitcoin market is building strength underneath it. This session is designed to help you understand what this bull run means for Bitcoin. Register now for access to a new on-chain metrics report from Check On-Chain at unchain.com/TBL. Blockstream, where the future of finance runs on Bitcoin. Go to store.blockstream.com and use code TBL for 10% off. Pick up a Jade Plus hardware wallet. It integrates seamlessly with your Blockstream app, and it's the perfect way for both pros and beginners of Bitcoin to get started with your cold storage. Store.blockstream.com, use code TBL for 10% off. Why don't you hit the true market mean before we move on to the next thing?
Yeah, so the true market mean is also an on-chain indicator. It's basically it's derived from coin time economics that James Check with David Pio wrote, and it's another way of calculating, and you can compare it. It's comparable with the realized price, but it's basically only the active investors, and it's basically more of a really the mean of all price trading in the history. So this if we would put this on a chart, then you can see that it really basically a market divider, and above it it's a bull market, and below it's a bear market. And the question is if we get a more tamed drawdowns, because in previous cycles we traded also down to the realized price and even under it. The question is, do we still get that again, or will the true market mean will be more of a bottom? But this is why, like, for me, as I showed you before, this short-term holder cost basis minus 1 standard deviation, we didn't get below that in the last 3 years. So that would be really a red flag for me. We shouldn't go below that. And if we go below that, we really should readjust our thinking of how this cycle will continues. And then you want to be looking, all right, how low could this thing go? And then the true market mean will be the first, really important price level to pick up. And that's basically also the upside of this whole range. You know, it's a bit higher, but basically that should be also a big support.
Okay, thanks, Johan. Now let's go to what's the next place you look for signal after we've set up your introductory framework on how you think about price?
Yeah, so it's depending on where, like, if we already had a big run up, then we're going to look for overheating metrics. Like, is the price overheated, and in what way? But if we have a long period of consolidation, what we basically have, then I'm first looking at, all right, like, how low are we at the implied volatility on basically the derivative volatility index, or I look at Bollinger Bands, which basically tells you if the Bollinger Bands are very extended, and then it means there have been a lot of directional trading, so or up or to the downside. And if the bands are really tight, then we've been trading in basically the same spot for a long time, and this is currently happening. And what I did, I looked back into the history, and I try to identify every time that it happened. So this is also on the 3-day chart, by the way. By the way, on a weekly chart, we're almost at the lowest spread of the Bollinger Bands that Bitcoin ever traded. So I think that's something. On a 3-day, it's not there yet because we had sometimes a bit lower, but basically it shows we've been trading in the same range, and after a like subsided volatility, you should expect a more volatility. And then the question is, which side will it be? And then I also overlay this on the 3-day RSI, and every time if this happens, I'm looking at the lowest point in the Bollinger Band relative spread. So I'll also look at the relative spread so I can compare it through the cycles, because the absolute number of the spread now is way bigger than it was here because the prices are higher. But if I look at in relative spread to the market price, then I can compare it. And every time, if we were at the lowest point, if you look back, and the RSI was above its moving average, then we had upside volatility. And when the RSI was below the moving average and was pointing down, then we had downside volatility. And I have to break it to you, Nick, but currently the RSI is below its moving average and pointing downwards. That doesn't mean we don't know yet when the big volatility breaks out. So we could get more sideways trading. It doesn't mean that the breakout is happening now or tomorrow. But if it were to happen now, then chances are big that it will be to the downside.
Yeah, I still think there's this sub 100 magnet on it, but that's, kind of my read on the weakening momentum. As you see, Johan's chart, December on the 3-day momentum got quite high, and then the spring and the summer was lower, and today is even lower than that. So the broad momentum has been in decline, and I think that ultimately that does have to wash out before Bitcoin can resume. And it doesn't mean we've exited the bull market. So I think it's almost the best case scenario for Bitcoin is that it gets that mini washout, and is able to test and expand the bands before. And the bands are simply, guys, it's a derivative of volatility, realized volatility in. So what the bands are looking at is what has the range been, and it just keeps narrowing and narrowing, and the expected range keeps narrowing and narrowing as we speak. Okay, now would you want to disagree with anything I said, and then you can set up the next chart?
Yeah, all right. So no, I agree. So the Bollinger Band is 20 bars, like in this case 60 days, and then with a 2 standard deviation up and down. So that's basically the bands, like you said, and that's a very important thing, and I think that's a big takeaway. Nick said that even if we were to break down, doesn't mean the bull market's over, and I think we already touched on that. There's a big we have a lot of way to go down still, and a lot of moments for bulls to defend, also on the 200-day moving average. But 104, if you look at the fixed volume profile, and this is basically normally in the normal volume profile, you see the volume per day, and this is the volume per trading level, basically per price. And these, so, and I took the range of November until now, so it's 10 months, like almost a year. And these volume profiles tend to have this normal distribution, and you can spot here the a high volume node at 118 and a high volume node here at 104. And this is the point of control. This is basically where the most trading have happened. And this should be the biggest support. And the other high volume nodes, this 104 should be big support too. And I just alluded to that the 200-day moving average is also at 104. So this should be a big support that we need to that I think we should keep. And like the 996 would be really the last man standing before it could go worse. But 104, and you can also see this big volume node is there are a lot of coins been distributing at these prices at 118, and that's why it's not a coincidence that the price here basically topped out and went back. And the big question now is just an uptrend and a lower or a higher low, and we get a higher high, or are we still like in a downtrend and there was a lower high and we get a lower low at 104? And then the question is, what will happen there?
It's an excellent setup. Now, I want people to digest what Johan is setting up, and then in our next episode, he's going to come back and give us an in-depth look on some of the secondary charts. So what I want both myself and then the audience to understand here is that we have to set ourselves up from where we are in the trend. So he's identified that by looking at how Bitcoin's price has behaved relative to its short-term holder metrics, and then layer on top volume, high volume nodes, and RSI momentum. And then with all of that, we set up, okay, what's the context? Then we can dive a little bit deeper and get the price. So Johan Bergman, research associate of the Bitcoin Layer, thank you for joining us today. Definitely consider becoming a TBL Pro member, you guys, so that you can read Johan's fantastic Bitcoin price analysis on an ongoing basis. And then why don't you tell people where they can find those charts that you had before as well?
Yeah, so the Onchain metrics are from Bitview.space, and it's an open source project, and there's one developer working very hard, and he's very talented, but most of all, very hardworking, and to really build this project so everyone can enjoy the on-chain metrics. So yeah, hat tip to him.
Thank you so much, Johan Bergman, and we'll catch you guys next time.
All right. Thank you, Nik.